Ladies and gentlemen, Joshua Salvetti, welcome back to another lesson of the High Performance Trader, right? So today in this lesson, guys, I want to be breaking down market structure, right? I really want to be breaking down to you guys what exactly my edge is, what exactly the edge means, right? And more importantly, how we use it to get in and out of the market with confidence, right? See, I coach a lot of traders, and most traders struggle with discipline. Or let me rephrase, most traders struggle with patience, right? And they struggle with patience not because they're impatient people, right? Generally, I think people, they could develop the patience. It's they don't have the confidence in what they're looking for. See, if you understand what to look for, it becomes much easier to be patient in the market. See, if I'm confident in my edge and I understand what works, I'm going to wait for it. Right? Because once again, for us to become profitable traders, our main goal is to become profitable, right? We must understand what the market's telling us, right? So let's go back to what an edge actually is. See, an edge represents one thing, a higher probability of one thing happening over another, right? So it's our job as day traders to understand what the markets are doing. We can't move the market. We don't have the capital. We don't have the influence. So it's up to us to make money, whether price goes up or down, right? So for us to do this consistently, we must have an edge, right? Which is our understanding of one thing happening over another. And we must have confidence in that edge. We must have clarity about what works and then be able to repeat it. And it's got to be simple, guys, right? Like I know a lot of traders out there have these wild theories and all these, indications and alerts and all, all these things they use. See, I don't want to do that. I want to be able to show up, look at the market, have a general understanding, right? A clarity about what's going on and be able to put money on the line. That's it, and manage risk, right? So the way I do that is through structure. I do this through identifying levels of interest with high volume and liquidity, right? These are the levels large money is going to give me their clues, right? They're going to show me, right? Large money is going to show you every single time, right? And if you're able to sit back, watch, be patient, observant, you're going to be able to make money off it, right? So I really want to break down this lesson, market structure, what it looks like, what it represents, and how I use it, right? So the day I'm going to be talking about is over here on 2/29/2024, right? So the market is currently supremely bullish. I mean, yesterday, March 1st, we broke above all-time high, right? The market's rallying, right? So it's very important right now for every trader out there to have that confidence in his edge, right? Because your ability to be able to understand what the market's telling you is going to help you become successful in this game, right? So the first thing I want to break down, right, is, well, let's start from the beginning. So every single day when I sit down on my computer and I look at the market, I identify areas of value, right? These are areas I'm looking for the market to come back into and give me a clue at, right? So I always pick the highs, right? So over here, we have a high at 507.77, right? And then I pick my 4 main critical levels, right? So for everybody that's part of my Discord or has taken my courses know what these levels are. I'm going to do a quick breakdown, right? Number 1 is previous day high, right? So this is going to be the high from the previous day, right? It's that simple. Number 2, end of day, right? So this is going to be the previous day close. This is the price that the market closed at 4 o'clock Eastern, right? The market closes every day at 4, and notice the volume that goes into the market at the close. Check it out. It's always significant. Each and every single day, there's mega amounts of orders that go in at that last second, right? So this is, once again, an area that has a ton of liquidity. Now, what liquidity means, basically, I want you to think about it like this. Large money needs to make their money, right? So for a transaction to happen in the market, right, for me to buy a share, someone must be selling a share, right? For me to sell a share, someone must be buying, right? A lot of traders get that confused or they're not aware of that. See, this is an auction. It's a transaction between you and another trader at all times. There's always an equal amount of traders, right? Some are more aggressive, right? Some are more eager, which causes the price to go up or down, or some are more panicky, right? Some are selling faster, which causes the price to decrease. It's all based on supply and demand, right? When the demand for shares goes up, the price goes up. Once again, there's only so many shares and they're always getting traded at the exact same time, right? This is a very equal transaction. I buy, you sell, right? So when you have an area like end of day that has 4 million shares going into it in every 5 minutes, this is an area large money not wants to trade at, but needs to trade at, because there's 5 million shares at 506.19, right? And that's just in 5 minutes. So you got to think that price, if large money wants to make a move, right, they want to buy all those 5 million shares, right? So what they do at end of day is going to give us a clue, right? And this is where we're able to sit back, become observant, and see how price reacts at end of day, and then we can make a move off it, right? So this is the concept, this is the theory behind critical levels. These are levels with high volume. Once again, look at previous day high. Previous day high had tons of volume, right? Next one, previous day low, right? This is the lowest price from the previous day, right? Look, right in the morning, tons of vol. Once again, the volume is our guideline, right? Wherever the volume is where we want to be watching. And then once again, you guys know it, open print. The first print of the day always have mega amounts of volume, right? So this is how I set up my chart each and every single day, right? Because I'm looking to see, I'm using these levels as entries, magnets, targets, right? Entries meaning, if buyers defend these levels, I go long. And targets where if price is selling off towards it, I know large money needs price to go to that level, right? Like in this scenario, the gap fill, right? Meaning we gapped up way above end of day. So large money, let me just show you guys what that gap looks like. So when you gap up significantly, right? All this space in between the new high in the end of day usually tends to get filled, right? And the reason is because there's 5 million shares down here that large money wants, needs, right? They need these shares to make money, right? So look at how price rifles off right into end of day. All that volume gets soaked up and goes into previous day or almost at previous day low in rallies, right? So once again, we use these levels to understand what large money's doing, right? So once I have my levels painted, now comes the easy part. Structure. How price reacts to these levels, right? And just because I look at these 4 main levels doesn't mean I don't look at other levels, right? There's pre-market high. It's another very important level. Sometimes it's an intraday level. You never know which level is going to be respected or disrespected. It's your ability to be patient and react to the way markets reacting at this level. That's how you make money. That's how I make money. That's what gives me the confidence to be able to sit back, be patient. That's what I'm looking for every day, right? So let's run through this. So we have our levels painted, right? We have all-time high up here at 510. We have this 508.77 level, which was from a few days back. It was resistance, supply, whatever you want to call it. And then we have pre-market high, right? So as price rallies, right? We get open print established. So we boom, we put a price level there. So now I'm going, okay, this looks very bullish, right? We're breaking above 508.37, which is pre-market high. We're coming down for a retest. That's structure. This is our first clue, right? We get structure. Oh, hold on. I want you to be able to see this. Okay. So we get structure here off 508.37. Now there's two things that can happen here. That's it. Buyers can defend it and price rallies above into 508.77 and higher, or sellers defend it, right? Now, whoever defends this, I want to take that into account, and that is how I understand the market conditions. Now, that is my edge. See, a lot of traders have all indicators, they have, alerts, they have all this different, tricks that get them in and out of the market, which is awesome. See, me, I want to be able to come to the market with confidence each and every single day. And the way I do this is by waiting until structures formed are broke, right? So structures formed right here off pre-market high, price comes down into it, right? Yes, this is looking very bullish. I didn't like how price was below the 90 EMA. Once again, that is a way to identify strength. And not only that, 507 was a significant supply zone. We had a violent sell-off there from a couple days back. So at this point, I'm just going to see how price reacts. And I'm also hyper aware of the gap up. See, the gap up is usually, like we were talking about, a high probability setup, right? When anytime you gap, whether up or down, it tends to get filled. So in this scenario, I want to see how price reacts. I want to see if these buyers can defend pre-market high, right? And if they can't, then I want to start looking for short plays. So you can see price comes right up into 50877. Boom. Sellers rip right through bearish structure, right? So once again, this is a bearish chart pattern, a bullish chart pattern, a break, a retest. Bam, just got invalidated, right? So now this is my first sign that sellers have strength, right? And sometimes it's just understanding buyers aren't strong, right? In this scenario, buyers are not strong. They did not respect the structure like they should have. So now price comes down into open print. This is their pretty much last chance. If buyers cannot defend open print, once again, look at all that volume at open print. So all those shares are there, right? So what happens at this level is going to paint the picture for me, right? Boom, we sell off right through it. Now look at how heavy the sell-off is and how fast it rallies down to previous day high, the next critical level, right? It's crazy how this works, guys. And once you see it, you can never unsee it. Look at how price, this imbalance happens within 5 minutes, just shoots down to previous day high. Let's talk about it. Why? Right? Now, let's bring it back to volume. There's mega amounts of volume at open print, right? Sellers were in control. What's the next level that has mega amounts of volume? In this scenario, the closest level is previous day high, right? So this is what we call the market imbalance. It's the space between an important level and an important level. And look at how price sold off super fast once structure broke, right? It just sunk right through open print, straight to previous day high, capturing all that liquidity. Look at the bar. So this is how we understand the story, right? So I actually missed that trade. It happened supremely fast. I'm not the type that likes to chase, but that doesn't mean it's not valuable, because now I'm like, okay, sellers are in control. Let's take pre-market data off again. This really paints that picture. So now in my mind, I'm going, okay. I mean, look at this. Look at this. Buyers tried. Bullish structure off pre-market high. This is make or break point. If buyers defend this, it goes up, maybe even all-time high. If sellers defend it, it goes down. See, this literally happens 9 times out of 10. When a critical level gets broken or defended, you usually go right back up to the next critical level. I mean, here's another gap fill that happened the day before it. Guys, this is our edge. Once again, it's not 100%. It's a higher chance of one thing happening over another. That's all we could do, right? So understanding that gives you an edge in and of itself, right? So I just love seeing that mega sell-off rip right down. And then look how price reacts to previous day high, right? So now we come into previous day high, which is another structural point, right? I mean, check this out. There's always structure happening. Previous day high, we break above it, we gap above it. Now we're coming down for a retest. So now, if you're just looking at this right here, this is actually a bullish chart pattern. I mean, we have an area of significance. We have an area of resistance that we break above. Now we're coming down for a retest. So now, what do I need to see to maybe take the market long for an open print play? See, that's not what that wasn't how I seen the market at that time, but I'm just trying to demonstrate how you need to be thinking. You need to be constantly going, okay, structure's holding. Oh, structure isn't holding. What does that mean? And just notice, right? Become aware of how once price comes into a critical level, how it reacts. Are buyers strong, right? Look at buyers show up, price rips right in. We start to get buying at previous day high. I mean, look at this. Buyers show up once, twice, 3 times. And then they come up and they cannot make a higher high. See, this is another reason why structure is so important. See, what structure is just, it's a break, it's a retest. It's a break, it's a retest. So when price is, reacting to a level ask yourself, how is price reacting here to the 9D EMA? Is it reacting with strength? Is it reacting weak? Is it extended? Is it hugging it? See, these are all ways for you to understand the strength and weakness of buyers in this moment, right? So once again, buyers cannot hold. And once they realize they couldn't hold, right? And once we could realize that, because price can't make a high, price knifes right through previous day high, right? This is where price comes up for a retest. This is where we first took the market short. This was my first trade of the day, right? Notice it's 11:40, right? See, I don't make a move until I have a super good understanding of who's in control of the market. This doesn't mean I have analysis paralysis where I don't move. It's I only move when there's an extremely high probability. I'm going to tell you guys why. Because look at how these buyers showed up here at previous day high. They tried. I had conviction that if buyers could not hold this level, we were going to get a mega sell-off at least to end of day, because that's the next critical level, right? And then if end of day can't hold, maybe we'll come down to previous day low, right? So it's literally, if this level can't hold, via structure, I target the next, right? Price comes into end of day, and notice we get this crazy battle between buyers and sellers, and then we get above it. Now notice, once we get back above end of day, we rally right back to previous day high, right? It's constant up and down. It's law of polarity. What goes down goes back up. That's literally what the market does. It's constant auction between these critical levels, right? So the next trade we ended up taking, because you guys need to be able to understand what price is doing at these levels. Just because we come up for a retest doesn't mean go short, right? Notice we sell off below end of day, we come up for a retest. Josh, this is bearish structure. You're 100% right. But that doesn't mean sellers are going to defend it. That just means if sellers don't defend it, now you have an edge. Now you understand. It doesn't matter if sellers defend it or not. Regardless, all what matters is you understanding who's defending it, right? So look, price comes into previous day high, but we can't break that 9, right? So once, and we can't form a new low. Now, the way I do that, right, is once price is coming into previous day high, I grab the low of these candles. Once again, I'm using structure to measure strength, right? Buyers reacted very well here, so I didn't really want to short into that. So instead, in my mind, I'm going, okay, what happens here if sellers don't defend it, right? And they couldn't, right? So I took the market long here. My first target was 507.76, and then open print. Once again, playing the critical levels, right? In the space in between, right? This is how I constantly get in and out of the market. It's looking at structure, looking how price is reacting to structure, and then putting on risk. Price rips right up into our 507.73. Once again, that's a market imbalance from an intraday level, right? That's it. It doesn't have to be a critical level, right? It just has to be a level. But notice, price then rallies right into open print. So, dude, guys, once again, price is going to do its thing. This is an auction. Large money needs to constantly make their moves at these levels or around them. It's not always perfect. Matter of fact, it's never perfect. The only thing that's certain is that it's not perfect, right? So once again, guys, learn to understand what the structure looks like, right? What it represents. In this case, it's the way the market communicates to us. Structure represents what the market makers are doing, right? What it looks like, it's a constant break and retest off levels of interest, right? And what does it do for me? It gives me that confidence to get in and out of the market with conviction, right? So I hope you guys like this video. Make sure you hit a like, subscribe for more content. More importantly, if you want to get involved with my team, the links are below. Check them out. I'll see you there.